Capital gains tax is a tax that's charged on the profit you make when you dispose of an asset that's increased in value. It's the gain that you make that's taxed, not the amount of money you receive, and some assets are not liable to capital gains tax. So every individual has a capital gains tax-free allowance, which is currently £12,300 this tax year. This means that you can make a profit from the sale of certain assets up to £12,300 without paying any capital gains tax. You may also be able to reduce your tax bill by deducting losses or claiming other reliefs, but this depends on the asset. Disposing of an asset means selling it, but it also means giving it away as a gift or transferring it to someone else, swapping your asset for something else or getting compensation for it, like an insurance payout, if your asset has been lost or destroyed. You can normally give assets to your spouse or civil partner or to charity free from capital gains tax. An asset can be a physical asset such as a painting or a property, or an intangible asset such as a lease. And as I mentioned before, you don't pay capital gains tax on everything that you dispose of, but you do have to pay it on the gain when you sell or dispose of the following assets. Most personal possessions worth £6,000 or more apart from your car. And this would include jewellery, paintings, antiques, coin or stamp collections. Property that's not your main home. That includes buy-to-let properties, business premises, and maybe inherited property. Most people are eligible for the private residence relief on their main home, meaning no capital gains tax is payable on sale unless you have let it out, used it for a business, or it's very large. Check out the description below for a link to check whether you are eligible for private residence relief. Capital gains tax is also payable on any shares or investments that are not in an ISA, a unit trust, or certain bonds. And, of course, on the sale of a business asset. This includes land and buildings, fixtures and fittings, plant and machinery, for example, a digger, shares, registered trademarks, maybe your business's reputation. These assets are known as chargeable assets. If you dispose of an asset you jointly own with someone else, you have to pay capital gains tax on your share of the gain. When you inherit an asset, it's usually already possibly had paid inheritance tax, usually paid by the estate of the person who's died. So you only have to work out if you need to pay capital gains tax if you later dispose of the inherited asset, and if you've made a gain on what you inherited it for and what you sell it for. So how do you work out your liability to capital gains tax? Well, you simply add together the gains made in the tax year from the sale or disposal of any assets that fall into the categories I mentioned a minute ago. If the gain exceeds your annual capital gains tax allowance, you need to report it. That's £12,300 in your self-assessment tax return and pay the tax due. You must report the gains even if they fall within your allowance, and no tax is payable if you're already registered for self-assessment and the total amount you sold the assets for was more than 4 times your allowance. So what rate of tax will you pay? Well, that depends on which income tax bracket you fall into. If you pay a higher or additional rate of income tax, you're going to pay 28% on gains from residential property and 20% on your gains from other chargeable assets. If you're a basic rate taxpayer, the rate you pay depends on the size of your gain, your taxable income, and whether your gain is from residential property or other assets. So let's have a look at an example. Firstly, work out how much taxable income you have in the tax year. This is your income minus your personal allowance and any other income tax reliefs you're entitled to. Let's assume that to be £20,000. Then work out your total taxable gains. So let's assume you've made a gain of £12,600 in this example. So these gains are not from residential property. So then deduct your capital gains tax-free allowance from your total taxable gains, which is currently £12,300 for the 22-23 tax year. So that leaves £300 to pay tax on. Now add this amount to your taxable income, which would make £20,300. Because the combined amount of £20,300 is less than £37,700, which is the basic rate band for 21 to 22 tax year and the 22 to 23 tax year, you pay capital gains tax at 10%. This means that you'll pay £30 in capital gains tax. If your gains had been from residential property, you would pay 18%, and if some or all of the liability falls above the basic tax rate band, you'll pay 20% or 28% on residential property. If you have gains from both residential property and other assets, you can use your tax-free allowance against the gains that would be charged at the highest rates. For example, where you would pay 28%. It's also possible to make a capital loss where the sale proceeds are less than the expenditure or your purchase price. I deal with losses in another video, so if you subscribe, you can get notified when I put that out. Thanks for checking out my YouTube channel. I'm Justin King. I'm a chartered and certified financial planner, and my aim is to help people live successful lives. My experience, that often involves understanding your money. I also have a podcast called the Retirement Cafe Podcast you might like to tune into. Check out the description below, and I hope you've enjoyed this video. If you have, please press the like button to help more people like you find my channel. For now, I'm Justin King, helping you live your best life.